It was an amazing disaster for the Disney company yesterday as their earnings call came in so badly that 1/10 of the entire company's value was wiped out as the bell at Wall Street began to ring. Folks, how bad is it for Disney after that terrible, horrendous earnings call? Well, it's so bad that they lost a value equal to the entire value of Warner Brothers Discovery. Let that sink in. Folks will tell you what happened and why right now. Hello folks, welcome back to the Pro Channel. We are as ever elated that you are here with us as we are not late in bringing you the latest news, explaining entertainment, and keeping you ahead of the culture curve. Today we are talking about the Walt Disney Company and that horrendous situation with the stock, which folks is not likely to recover soon, although we are not giving you financial advice. We are simply looking at the tea leaves of a Bob Iger who has done this before. Is he going for an encore? Nelson Peltz not there anymore, and guess what? The last time Peltz exited the proxy battle, the Disney stock dropped and dropped. Now it is a case of deja vu all over again. Let's bring on the panel. Let's talk about it. Valiant Renegade in the house for this one. Look at what the narrative was supposed to be. This came out earlier today at 3:31 a.m. I'm going to assume that's Pacific time for sanity's sake. Disney posts better than expected quarterly results near streaming profitability goal. And this is why last night I said we have to pay attention to the psychology of this. What is going to be the preferred narrative coming out of this meeting? And frankly, folks, I'm going to tell you, no offense to Frank, that I think Bob Iger did a huge disservice to the company today. I thought many of his answers, I thought his personality, his attitude, his aura was dour and down and depressing. That's a triple D, and it was not good at all. Disney topped Wall Street forecast for its fiscal second quarter and inched closer to the long-awaited milestone of streaming profitability. Now, you're also going to note that while Deadline is dead wrong on a bunch of this stuff because they came out before shareholders had their say, they do have this right. Disney was not profitable with streaming overall, despite what they've claimed, and that's because ESPN was so poor. And yes, Disney Plus, when duct taped to Hulu, did make a profit, but that's only because they duct taped a very, very expensive, i.e. $40 billion plus probably streaming service to their main flagship, and that's what's saving the flagship for now. Revenue for the quarter ended March 30th increased to $22.1 billion from $21.8 billion in the year earlier period. Excluding items, diluted earnings per share for the quarter increased to $1.21 from 93 cents. Analysts had been expecting revenue of $20.53 billion and earnings per share of $1.02. The entertainment direct-to-consumer operation, that's DTC, consisting of Disney Plus and Hulu, finished the quarter in the black ahead of schedule with operating income of $47 million. The two had a loss of $587 million in the same period of 2023. Jonas explained to us how they managed to do that. That's a little bit sneaky. And as you get ready to explain, let me tell folks out there, and I am so glad the investors seem to know this. I was so worried and really believed that the investors would see the headlines and go with it. That hasn't happened. But as Jonas, as you're ready to explain how it is that Disney managed to turn a profit with Disney Plus and Hulu in this particular quarter, folks, the key to knowing what's going on here, and we're going to talk about this later in the show, is Hulu is about to cost them something like $15 billion, and we'll explain why. So $15 billion, and they made $47 million this quarter off of Hulu. Well, that's a problem. Go ahead, James.
I think it's probably better if I don't comment on this myself. I'm going to go to my representation, Mr. Valiant Renegade Esquire. Valiant, can you explain to opposing counsel why they have done this?
Done. I might have missed the first part of the question. Done what specifically?
So how did they manage a profit? Yeah, with the streaming this quarter.
Oh, with DTC. Well, we can only take guesses, of course, because Disney doesn't afford us every single detail, which not unusual for a company like this.
What did they not have to buy, Valiant, this past quarter?
Well, in this past quarter, they did not have a whole lot of theatrical content that they would license from themselves with Disney Plus credit card swipes. That's a big part of it. And that's something that I speculated on months ago. I said, when you look at Disney's drive towards profitability for Disney Plus, for DTC this year, they had to do it by the end of 2024's fiscal year, which is September 30th. One of the ways you get around that is the strikes last year definitely helped them out. because that was less content that they were producing at the time that they would be taking the costs of on the balance sheet of Disney Plus right now were they otherwise coming out. There's also the dearth of theatrical content. We didn't have any major releases from Disney in the theater in the first calendar quarter, which is Disney's second fiscal quarter for this year. So the amount of things that would have landed on Disney Plus from theatrical releases, it wasn't what it was previously. So that was a big help. Disney has been basically cutting their way to profitability with DTC by and large. You've also got a lot of new signups thanks to the deal with Spectrum that they made. 6 million new subs on Disney Plus, and a lot of that I'm sure came from Spectrum, probably the overwhelming majority of it. Those are all ad-based. So there's advertising revenue that's going up there. That's helping. But I think it's more cuts at this point. And more importantly, Disney seemed very clear that they were guiding towards the fact that DTC was going to fall back in the red for this current fiscal quarter. So when they have the next earnings call in August, we're probably going to see it fall back into the loss column before they suggest, hoping, that it pulls back positive for the final fiscal quarter that ends September 30th. I don't know. Is that possible? We talked about why, when the Acolyte was scheduled for June, Skeleton Crew fell off the chart. We don't even know when that's coming out. That was originally supposed to come out before the Acolyte. Well, how do you save, $150 to $200 million in costs that would go against Disney's bottom line for Disney Plus? Well, you move a show like Skeleton Crew, so you don't claim the expenses yet. Now, they still have theatrical movies coming out that will probably go to Disney Plus. Maybe they will share them with linear broadcasts, especially like some of the Fox content. Maybe they put it on Hulu. Maybe they put it on FX. Maybe they also put it on Disney Plus. Things like Planet of the Apes, stuff like that. I mean, how are they gonna divvy up those costs when it goes to streaming as they continue to consume their own content? But there's not a whole lot this year that would be pumping in. I mean, last year they had 7 or 8 major releases. This year I think they have 4. So it's going to be very different.
So Valiant, the guidance I would say that was coming out of Deadline and so many of other places like the trades and official financial websites was largely, utterly positive based on what Disney was saying. And I'll show you this. This is what Disney had released very early this morning. The Walt Disney Company reports second quarter and 6 months earnings for fiscal 2024, and it showed that revenues for the quarter increased. Diluted earnings per share was a loss of only 1 cent. Excluding certain items, diluted EPS for the quarter increased. Second fiscal quarter of 2024, we achieved strong double-digit percentage. And it goes on and on, of course, with positivity, which was what you would anticipate out of a company. But this did not work, and this is new, I think. I mean, I'm really shocked that investors have had such a strong reaction. I'm not saying that I'm shocked that there was serious scrutiny placed on the mouse, but take a look at this. This is actually coming out of Market Watch right now. This is live. I've got another article we'll bring up shortly, but this is brand new. It's saying Disney earnings send stock sliding 10% towards its worst day since 2022. Disney reported fiscal second quarter earnings before the start of trading Tuesday. Market Watch will be covering live. So it is saying Disney's earnings looked good. It's saying that Market Watch, but Wall Street is disagreeing with that assessment, and it's to the point now that Market Watch is calling this perhaps the worst day Disney has ever had since 2022. There have been some rough days at Disney. Valiant, what do you make of this being the worst in 2 years for the House of Mouse?
Well, there's 2 things here, and one of them that I hinted at during my live show. We kind of ran out of time, and I neglected to bring this up, so I'll mention it here for you. The first thing that you can see is that we did cover during my live show. The company also, quote, tempered fiscal third quarter expectations for the parks business. That's a big part of it. So it wasn't about just what happened this quarter. It's like we always talk about the guidance going forward is what people really look at because the market prices things in months in advance. 6 months.
What was their guidance on DTC growth for the next quarter?
Well, like I mentioned before, they're expecting it to slide back in the red. So they're already suggesting, we showed 47 million this time in positive, but we're probably going to be back in the red right now. Here's the other thing. Go back to the press release you had up a second ago. This is what I wanted to mention during the call because I even mentioned this about the EPS and forgot to explain.
Tell me where you need me to go in this one, by the way.
Scroll down.
Tell me.
Scroll down. Stop right there. Nope, go. The first section. Keep going up. Stop. In the second fiscal quarter of 2024, we achieved strong double-digit percentage growth in adjusted earnings per share, met or exceeded financial guidance. As a result of this, we outperformed. The EPS growth target is 25%. Okay. Now, they had something in there, I believe, about where was the diluted EPS? Was it above
diluted EPS? I believe it's up here.
There it is. Yeah. Diluted earnings per share, okay, was a loss of 1 penny for the current quarter, compared to an income of 69 cents in the prior year quarter. Now, let me talk about the difference here. Earnings per share is calculated based on the outstanding number of publicly traded shares, not the shares that are owned by the Treasury, in this case, Disney itself, Treasury stock. Diluted EPS includes Treasury stock. What did Disney do in the last quarter?
In the last quarter?
Yep.
Well, they're saying that they've purchased a huge amount of their own stock.
$1 billion. They purchased the repurchase program. They purchased back $1 billion worth of Disney stock. So when you calculate EPS, that $1 billion of stock that was floating out there last quarter wasn't in the EPS calculation this quarter because now it's back in Disney's pocket.
Well, now, wait a minute. I got a question about that might help the audience. If they were buying $1 billion of stock back in the last quarter, is that the same quarter that Nelson Peltz was battling them with the proxy war?
That would have been, well, the current quarter they just reported, right? Or the quarter before. Yeah, that was during the proxy fight. Yeah, that was during the proxy
Disney
fight.
was buying back $1 billion of their own stock during the proxy battle. I think that's worth some investigating.
You keep it
on
out
our
of
part.
circulation, so Peltz and his people couldn't buy it.
Well, companies do stock repurchases all the time,
sure.
right? That's very common. But the point is that the reason they're bragging about this, and this is what you'd have to do the math on it. But part of the reasons they're showing, okay, earnings per share was nice, but diluted earnings per share was a loss for a penny. Part of the reason that the earnings per share showed the growth that it did or showed the numbers it did is because there was $1 billion less of stock in the pot. So therefore, the earnings was divided amongst a smaller number of outstanding shares than previously.
Yeah.
Because Disney took $1 billion worth of it off the market. So that has an impact on earnings per share. So that's why when you look at diluted, then you're talking about, well, all the Disney shares out there. If we took every share out there, including what Disney owns, and just bought back, they actually lost a penny a share.
Very interesting analysis. And how do you think buying $1 billion during the proxy battle, how do you think that impacted the stock price overall? Do you think it had any effect, or was it negligible?
Oh, I definitely think it had some kind of impact. Again, we're talking about $1 billion worth of Disney stock at the time that Disney stock, when it peaked before the earnings call, what was it? Maybe around a market cap of 180 billion. Might have been a little bit higher. I don't remember. But it was up there. It was one of the highest points in a while. So $1 billion off of that is not a huge amount, but it is something that certainly would have an impact, albeit not enormous, but it would have an impact on that earnings per share because now there are fewer shares outstanding. So that's part of it. But when you, like I said, when you look at the totality of things, now part of the total return for investors also includes things like dividends and whatnot. And part of what a company wants to do is they want to return capital to shareholders, and they do that in two ways. They can pay a dividend out, or they can do share repurchases, right? That's how they send money back to investors. So that's very common practice, and I just want to be clear on that. It's not like Disney is doing anything out of the ordinary here, but it's something that we need to acknowledge that
it was unusual timing. I will say that, and even Nelson Peltz was like, "Why are you doing this at this exact moment?" Except to try to give the appearance of financial feasibility.
Yeah, better EPS.
So, Valiant, before you have to go, I'd like to get your take on this, also from Market Watch by Tommy Kilgore. Disney stock nears key support line after creating a bearish island reversal. It says Disney stock sell-off has created a large gap in the chart between Monday's intraday low of 114.15 and Tuesday's intraday high of 107.88 in the wake of first quarter results. A downside gap such as this is viewed by many technicians as a resistance zone. The idea behind that view is that those who bought before the gap and were shocked to see the stock open so much lower would be happy to sell. The stock approaches the breakdown level. Meanwhile, the stock has entered the support zone created by the previous upside gap between the February 7th high of 99.28 and the February 8th low of 106. You get the idea. The stock was recently trading down 9.7%. Valiant, just your take. What do you think investors are thinking today? No financial advice, of course, but what do you think is sort of the mindset as people watch this happening, especially given the yo-yo effect? Yesterday, so many financial advisors out there were saying that this was a buy. In fact, there was an article out there, and maybe Jonas or somebody can help us find it. There was an article out yesterday saying that Disney was going to 140 on this earnings call, and it was out of a reputable analyst. So, what do you think they're making of this?
They obviously don't like it. It is what it is. And like we talked about during the call, it was striking that how many questions I've never heard in years of covering this. I've never heard so many questions that were trying to focus Bob Iger in on, tell us what's going on with the damn studios, because the studio system that drives the IPs at Disney, that brings people to the parks and things like this, the studios are just in a complete chaos. It's a complete train wreck. Everything. And I know they love to key in on Marvel, but it's everything. It was Indiana Jones. It's Pixar. It's Disney Animation. It's Marvel. Everything is failing right and left. And yeah, they might have a couple of winners, right? Here and again, things like Deadpool, but that's more about Ryan Reynolds. That's more about Hugh Jackman. I don't think that's going to translate into the resurgence of Marvel a year later with Captain Falcon. I just don't see it happening. I could be wrong, and that's fine. We talked about how
Captain Flop.
Yeah, Despicable Me 4. Does anybody have any questions? What's going to win the summer box office for animated features? Despicable Me 4 versus Inside Out 2? No, nobody is asking that question because everybody knows the answer to that. The answer is going to be Despicable Me 4 is going to wipe the floor with Inside Out 2, most likely,
causing Bob great anxiety.
Yeah. Yes. Well, after the trailer reaction, I never thought we would see the day when Sonic the Hedgehog 3 might actually beat Mufasa. It's on the table now. But here's the thing to look at, Valiant. This was out of Motley Fool yesterday at 2:39 p.m. Is Disney stock going back to $140? One Wall Street analyst thinks so, and it goes on to talk about all of that. Folks, this is why I think it's been a worthwhile endeavor to listen to Valiant Renegade. He's not a nut. He's not crazy. He's not a flamethrower. You've been talking about the troubles that Disney has. Clearly, after today, you've been proven right yet again. And so congratulations on your coverage. Folks would be better off, I think, watching you and listening to you than tuning into some of these other analysts who clearly, I think, have some sort of agenda, although not specifically aimed at anyone.
I actually think that this is an excellent moment to bring up this super chat here from Staccato DDS.
Hey,
for $100, was there anything in the earnings call that hasn't been predicted by your panel back in 2023? You guys nailed it. It's an observation of mine that if you ever want to know what's really going on with Disney, it's the exact opposite of whatever mainstream media is reporting.
That's it. Generally speaking, yes, that's it. Now, I didn't make any specific predictions as far as what would happen with the price of Disney today, and I'm never going to do that. But yeah, I mean, it's look, I thought when Disney in the previous quarter, the last earnings call 3 months ago said that we think we're going to have between 5 and 6 million new D+ subs in the current quarter, meaning the one they just reported. And that turned out to be the case. They got that. They also got a little bit more than what they anticipated. I also had said in the past that the minute that they report a profit on Disney Plus, you're probably going to see the stock price react very positively to it. That did not happen today. I mean, they reported a profit, albeit a small one, and I said the first one's probably going to be very small. But what happened was that they reported we got 47 million, but we're going to lose money again this quarter. That's basically what they said. So they kind of cut their own foot off on that one. That was part of the negative reaction to this. But when they came out and they said, well, we did all right with the parks this fiscal quarter, but the one we're in now that we'll report in August, we might see a little softening there. And you say that. I mean, look, Right now, you've got linear content for Disney that is caving like it is everywhere else because people are cutting the cord. The parks is what's supposed to hold Disney up. And if they're thinking that, well, the parks are going to soften over the summer months, which is exactly what they're talking about. We're going up through June 30th. Now, they also think that between July 1st and September 30th, that they'll see a better park attendance towards the back half of the summer and into the early fall. Well, okay. You would think so. But then again, we're not even in that quarter yet. We really don't know what that's going to look like. Guiding towards the quarter that we're currently sitting in is one thing. Looking at the a quarter that doesn't even begin for another 2 months at this point might be a little bit more tepid.
Well, I'll tell you one thing that I did not expect.
Okay.
And the thing that I did not expect and that I did not predict is I would have never believed that Disney would not release some positive things for the future in one of these calls. They always do. And Jonas and I were worried because we have planned an entire week of exclusive reveals and scoops and leaks out of Walt Disney World and what they're planning to do. And we thought, oh, no, they're going to beat us to all of it. That's going to be their pitch. Nothing. They said nothing. And I really did not anticipate that. And folks, we have come to the end of yet another video of excellence as we continue to show you what is going on behind the curtains of Hollywood. Folks, like, share, subscribe, and click it. Stick it to the algorithms. It's the notification bell. Drop a comment down below because we covet your comments. We care about what you think. And as we always say, because we mean it, keep learning, keep growing, and unlike Disney, keep having fun.